Thank you guys so much for joining my full live video, and we even got a donation so that I would stream all day. So thank you guys so much for tuning into those live videos, because it was very entertaining how at 1:45, an hour or so before the close my time, we actually did say, hey, it looks like by the time of 2:30 we're going to see a lot of these options expire, and then there's going to be a rug pull, and then 2:30 hit, and about 3 seconds later we saw a little rug pull moment. So that was a lot of fun. But today we're going to get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward, taking a close look at AMC, but also a look at GME, because I think we have a very high potential for some kind of fake squeeze. So tune in, if you're here for the GME AMC thing, hey, I get it. Those are going to be a little bit later on. So stick around. And if you want to, you can skip ahead, but stick around and maybe learn about some other things that we've been talking about, because the market does correlate to this right now. So as we go over into the SPY, first of all, just look at this. So close to turning up on the daily for GameStop here. But I wanted to pay attention to the SPY. Now the SPY, just going into the 30-minute, we were doing this live where we were just watching some little 30-minute moves and saying, notice when the SPY goes up, GME and AMC, they start to pull back. And when the SPY goes down a little bit, right, the SPY went down here, GME saw a little bit of a pop. So there seems to be some kind of negative correlation with the market right now to GME and AMC. And I just thought that that was interesting. Now, as we look at these signals, we're going to get into the shorter time frames come Sunday. So make sure you're subscribed. For now, we're going to look at this over on a daily scale and talk about how there could be some kind of fake squeeze leading to a market downturn that also causes GME and AMC. Maybe the problem comes to light a little bit. We actually see some kind of fake squeeze, because I think this daily here is going to roll over in the next couple of weeks. I would say maybe even on Monday, this thing starts to roll over, because we're starting to hit those levels. We have reversal signals up here that we're going to talk about on Sunday. But for the SPY, if this curls down, the reason I think this might be some kind of fake out is because we're not very close to this center line. So I'm really open to the fact that this could just be some kind of pullback in the grand scheme of things to the 20. We could pull all the way back down into the 50. The key thing here is, the monthly expected moves, that's the yellow lines. We have a 68% chance to land in here in the month of July. Okay, so as we did get outside of that, we see that resistance come in. We still have to be open to moves going higher. We'll talk about that on Sunday. But for now, if we do see a daily overall pullback in the beginning here, even if it's dramatic, we might just see that get down towards that center line and curl back up into positive territory, kind of like we did over here. You notice that we actually went down a little bit more like time and dramatic to the downside, and we got pretty negative here. But you notice when we curl up, positive territory is there. This is where we were paying attention to the VIX and telling you guys there would be some kind of short squeeze. Hey, we base out again, we curl up positive territory. This is what we're going to teach you in the swing trading course, which is coming out tomorrow night. Okay, tomorrow night there's going to be a huge sale on the swing trading course. I'm literally going to put it out for $50. That's like a 90% discount to probably what it should be priced at this point. So once I have that out, you're going to want to snag that. It'll tell you the entries and stuff for swing trading, and that's what this is right here. But I just wanted you to notice how far we are away from the center line. And I think that's the main thing I want to take away from the SPY here. And we're just going to switch over to the Qs so we can kind of move along. And first of all, I just wanted to say what we called out, especially if you're new here, what we called out in Thursday night's video. We said most likely scenario to happen for Friday is the SPY is going to go make this divergence and go up towards that monthly expected move, while the Qs go up towards its monthly expected move and makes a lower high. That is where you see a lot of topping signals. One of the biggest topping signals is the Qs cannot catch up to the SPY. We're seeing that rotate down. If that curls down into negative territory, we're going to have those new weekly ranges for you. And we're going to talk more about this on Sunday. For now, on the daily scale, I really just want to get this point across of, hey, the Qs are weaker than the SPY here. So there is more weakness in the tech stocks than there is in the S&P 500. And so we have to pay attention to that. Now, look how far away we are from the center line. The last time that we were up in this area, we saw a lot of dips down on this MACD that led to another push higher. You see this dip down right here. This is what I think we are going to get soon. Some kind of dip down, maybe for 1 to 2 weeks, that then leads to another move higher to really convince people that this market cannot go down. Okay, so I'm expecting some kind of reaction. I would say for the Qs, more likely we are to see a reaction towards that 50. But will that happen in a straight line? Most likely not. Most likely, you're going to take some time to do that. And then maybe by August, we actually start to turn back up. So we'll pay attention to this. We'll look for those 2-hour divergence for this. But this would be an indication, especially if this happens while GME and AMC see some kind of squeeze, some kind of gamma squeeze maybe, because I don't think that it'll be the short squeeze just yet. I think it'll be a fake squeeze to convince you to get out of your positions, and then we'll see it actually head down to those low levels again. That's what I think is going to happen here. Now, I'm still paying attention to the signals. As of right now, GME looks like it's going to turn up on the daily. We're going to talk about that in a second, but I just wanted to show how the Qs on these reactions down are curling down on daily MACDs. Look how that daily MACD is just about to cross, and GME is the opposite side of that spectrum. So we are seeing a time, and we've said this for the past couple of, pretty much since Roaring Kitty came back, we said you are most likely going to experience a time where the Qs and the SPY go down while GME and AMC go up. And that is when you know that the problem is coming to light a little bit, but this could be a fake squeeze right now. Now, how you know that's a fake squeeze is if this turns down and then curls up at any time and GME does the opposite. So we're going to talk about that in a bit. But I think right now you do have a chance for some kind of fake squeeze in those stocks. You see the Qs dip down to lower levels, and then they're able to base out and curl up over time. And sometime in the actual fall, we actually may see some kind of crash. Okay, I'm just saying that in general, it looks like a lot of things are building up to some kind of crash. We are in a huge bubble right now. We have Nvidia trading at 11.5% or 11.5 times what it's actually supposed to be right now. So that is something huge, because Cisco was only at like 5 times and Nvidia's at 11.5 times. So that is something to really understand there, that it's very overvalued at this point. It's in a bubble. And so the Qs, and this is their collateral. Okay, this is the collateral for AMC and GME. So if this starts to really fall off, we actually could see GME and AMC see some kind of pop, but I think that'll be a fake squeeze. As for the Qs, really pay attention to if we're able to cross back up and go positive, even if we go negative a little bit here for the daily scale. If this is going to be overly dramatic, we need to start to look at weeklies. And the thing is, you could see a weekly pullback here and it would make sense, right? We go back down into an area that makes sense. All right, the weekly, we tear down for a few weeks down into this weekly 20, and then we see that build back up over time because we are still far away from that center line. Okay, so if this is going to be more dramatic, you still want to see if that weekly is able to turn up at that point. And if that weekly is going to turn up, most likely we will see some kind of daily divergence. So we'll see something like this, get a divergence down here, and we will notify you about those things. But I just really want to get it in your head, like that is a dramatic downturn, but dramatic downturns are a psychological thing that they do to retail in the market to convince you everything's going to crash down, and then they just start to swing everything back up. So we're going to pay attention to the signals very closely here. Apple's one that I'm really paying attention to because it has divergence. So a lot of these tech stocks, they have divergences here, and this is going to be very important to come back for those shorter time frames. But I just want you to notice how far away it is from going into a negative trend, crossing through that center line. And if you don't understand those things, you need to click the link in the description right now and try to get learning over, or try to learn more over the weekend so that you can understand what a negative trend, what a positive trend really means, because you've been in a positive trend for a long time now, and you're way up here, which means this most likely could just be some kind of pullback that then leads to us actually heading higher over time. So we will be paying close attention to this. We have a lot of signals for Apple in this area, so make sure you come back on Sunday. Make sure you're subscribed. Tesla, this one here, the biggest implied volatility for the whole month of July is Tesla. So this shorter time frame, I'm just going to show you this 30-minute. This right here is very weird to see when you have a stock with that amount of implied volatility. It's very weird. So we're going to talk about that on Sunday a little bit and look at those new ranges. But for now, you'd have to say the daily is way up here. It's cooked. You could see another reaction up, but we did have some signals up here that showed us a little bit of weakness. We're seeing that weakness come in, but we are closing back above the 9-day moving average, which tells me, hey, this thing might not fully cross over yet. Now you're seeing a 30-minute. We'll talk about the shorter time frame. So overall, what it looks like for the next couple of weeks before earnings, we may see some kind of dip down to get some sort of pullback, and then earnings is going to be a 50-50 flip. If we're down in this area by earnings time, if we're down by that center line, that means either the selling can really ramp up and go negative, or the good news could actually flip you back around and you might see actually another push higher, really liking this zone, by the way, by that 200. A retest of the 200 would be nice. My first line is at that 230 level, some kind of retest in this area for Tesla. So we're just paying attention. It looks like a lot of things need to have a daily pullback, and one thing telling you that it's going to have a daily pullback, still have to look at the shorter time frames on Sunday to see, if there's going to be a little bounce or something. But Amazon here actually turning over. It's turning over on a daily MACD, and that is a big deal because now it's telling you that pullback momentum is there and you can head down towards that 50. So still looking for this to base out at any time because we're far away from the center line. So this is a dramatic downturn, and you see when we actually get a downturn how dramatic it can be. And I'm saying there might be one more push higher after some kind of pullback that could cause the most dramatic downturn you may have ever seen in your life. I genuinely think this might be worse than 2000. This might be worse than 2008, just based on the data alone, where we're at, the amount of debt that we're in, and how much debt is really holding up the market, the derivatives that are in trouble because of GME and AMC. This could be one of the most historical moments in stock market history in the next year or so. So we're paying attention to this. I think the main times to pay attention to a crash are if this signal starts to show up, we see this daily signal, okay, pretty early on, or if we extend this all the way into the fall. We could extend it all the way into January. As of right now, January and I would say September and January look like months where we could really run into some problems going into election time, and then also after the election, if Trump wins or something like that, I think January might be where things start to ramp up as well. So we'll pay attention to the signals first, though. That's important. As we look over at Nvidia, what is it doing? It's kind of confirming a lower high. We talked about how Nvidia on the shorter time frames has a higher likelihood to get a lower high, and that is what we're seeing at this point. We're seeing a rejection of the MACD. Notice that momentum was not confirming upside. But is it negative yet? No. So if we're able to base out, maybe come down and test this 50 or the bottom of our range, we have to look at those weekly ranges for this week, but we can see that head to lower prices and then turn back up over time. And this could be some kind of elongated pullback. So we're paying attention to this. This could just be some kind of A, B, C move to consolidate and then end up heading higher after we hit that 50. So that's what I'm really paying attention to for Nvidia. But I just want to tell you, for Nvidia, if you do see this turn down, it's going to be really good to take that swing trading course that's coming out Sunday night, so make sure you're tuning into Sunday's video, because that's when we're going to announce if that thing's actually out there, and the link will be in the description. But for now, you just want to see this, because if this pulls back this much and you actually see this get really close to the center line, look how much room you have to make a divergence. This move actually could be fairly significant here and take a while to play out. So I'm not saying that it has to happen. I mean, you definitely can see a major top with these kinds of signals, but I just want to have a level head and make sure to be open to the scenario of us turning back around. And Nvidia is going to be one to follow very closely because this holds such a big weight in the stock market right now. So pay attention to that. AMD, this one, well, what did it do? It went up towards our weekly expected moves and started to fade down. So this one here showed you reversal signals. We really haven't seen that turn down. The only reason I'm a little more worried about AMD rather than saying I'm worried about Nvidia or something is this is a great move. Most likely this will just be a pullback, but I just want you to notice how you're closer to that center line. So it can be a little bit more dramatic over time. And then we got to pay attention to earnings around then. Okay. So a lot of the times I say earnings is a 50-50 flip. We have fun with it. We flip a coin live and stuff just to demonstrate how it is truly a 50-50 flip. We see a lot of companies that produce great numbers, but say one bad thing. We have a lot of companies that produce bad numbers, and then they say one good thing, and then the stock goes up. So it is a 50-50 flip. We can pay attention to the signals unless we're seeing dramatic, daily signals or dramatic 2-hour divergences. Downsizing those positions and things like that is always a good thing to do if you're going to play earnings. I do not mess around with earnings. I play after earnings is what I overall do. Meta, looking at this one, able to curl down right here. So right now you're in a daily pullback for Meta. We're getting towards that 50. We could see some kind of reaction up. We talked about the level right here being important. Kind of a left head and a fizzled out right shoulder could be coming. So we'll pay attention to that, especially if we see upward moves from this kind of thing. But right now it's all pointing towards pullbacks. We'll see what happens before earnings. But Meta right now curling down, telling you, hey, I could pull back. And I'm also a little bit closer than other stocks to negative territory. So this could pull all the way back down to 453.08. That's my true assessment there. We've seen support there. We've seen breakouts there. So I think this level right here, if we don't bounce from here, well, then we might get some kind of small bounce, fade back down and go down towards that 453.08. We'll pay attention to those weekly ranges that come out on Sunday though. As we look forward, now we get into AMC and GME. Okay, so first we're going to go over AMC and then GME is going to be after that. But the good thing about AMC here, we're going to go into the shorter time frames, but I just want to talk about this from a daily and a monthly standpoint at this time, just to show you guys we have curled up. Daily momentum is positive and we have not lost any of these shorter time frame moving averages, right, or the shorter moving averages since we curled up. You notice we curl up right here. Actually, we pretty much curled up on the RSI right here, and then ever since then we have not been able to go back below this 9-day moving average. So if you start to take back the 20, have that new line in the sand for some kind of gamma squeeze for you on Sunday. Last week it was 579, and what did we see? Reactions like 4 cents away from 579, and the fight begins. So the stock is getting beat up. We got to look at the shorter time frames. They look pretty good, but I just wanted to show how the daily momentum is still to the upside as GME is about to do something big. But first, I wanted to show you on the monthly scale. You know, everyone telling you these are bad investments. This is a terrible thing to invest in. This is so bad to invest in. This is terrible to, that's all you see in the media right now. Well, as of right now, the overall rule we keep stating is buy low, sell high. And right now you have the curl up of this monthly MACD. The last time that did curl up, you saw something crazy happen a few months later. So if this is curling up right now, if that can go positive, that would be a great, great sign for the stock. Okay. And what do I believe might happen if we do see some kind of fake squeeze is I think we're going to go up to something like $23, $20. I think that would make total sense for AMC. And then that might fade all the way back down to tell people that the moment's not going to, no, it's over, right? That's what I would overall think about if we see some kind of fake squeeze. So we're paying attention to this very, very closely because we are turning up on a monthly scale. And when we put this out on the swing trading, we're actually going to add investing to that because investing is overall swing trading. And this is one of the signals to pay attention to. When a monthly turns up, that actually is a better sign for upward price action. And then if we just compared this to say Nvidia, look where that thing is, and this is what they're telling you to buy. It's completely overbought, and they want you buying this while secretly institutions are buying things like AMC and GME, which are starting to curl up on monthly MACD. So really pay attention to that. Just showing you GME real quick. That's the same signal. And it's even closer to going positive. So GME even looks like the better overall investment, even when compared to AMC, but compared to Nvidia and things like that, it's just a no-brainer. So as we go into the daily, this is the main thing I wanted to talk about today. One, this moment right here where these start to really dip in, it tells you that the expectation of bigger price action is actually lower. But usually when they do get tight, that means something unexpected does happen. And if you were like, I'm just saying this from like a bro standpoint. If I was a gambling man and I was talking to my friends and I saw these signals and I was like, well, where do I think that we could see a big upward move? And I would place like a bet or something like that. Well, it would be when this crosses, and look how close that is to crossing. You're getting above all the moving averages. This is a huge swing trade signal. You have 2 green bars above all of the moving averages on the daily scale. And I told you guys live, I'm just going to come out and say it. On Monday, we have a very high probability for something crazy to happen, especially if this is able to turn up. Now, if that doesn't turn up, we see this just go down right away. No, right? But if this can just get that green bar, it really looks like to me, this is a swing trade signal. And this right here is telling you, hey, GME could see some crazy, crazy price action to the upside as it is trying to curl up and get that lagging indicator to go. We already have the RSI, we already have the price action, and the Bollinger Bands got tight. So the unexpected big move could happen right away on Monday. And I would really pay attention to that, because the last time GME and AMC saw a huge move, some kind of short squeeze, it was on a Monday, and that looks like that is proving right here. So this is what you really, I know it's simple, but this is literally all you need to see upward price action. If you look back in the past, we curl up on a daily MACD right here at $11. Let's say $11. What happens shortly after? Upward price action as we take back those moving averages. What happens right here? We turn up on the daily MACD. What happens the next day? Boom, big upward price action, a gain of almost 47%. So you're looking at some kind of move like this. If this is able to curl up on Monday, you're gonna see some kind of move like that. Will it go up to a weekly expected move and just fade down? Or is this gonna get through that weekly expected move and see something crazy? I think we have a high potential to see something crazy on Monday for GME with this signal that we're seeing right here, because it's just the lagging indicator. It's the last one. All your other things, price action, getting above moving averages, RSI above the center line, everything else is with you except for this MACD crossing. And I think we have a good shot to do that on Monday, because the other signals are telling us that it's going to happen. Now, going forward, what I wanted to pay attention to especially was volatility. Okay, volatility, this daily scale, you're seeing that wick out. And we said, this looks like this has a good chance in the shorter time frames to go back to that 1212, and I'm expecting a reaction. We got a reaction. We got the reaction, okay? So this tells me this can start to go positive. That means volatility might be here. But I think if we're going to see extreme volatility come in, we get some kind of retest where that fades off, and then we'll see what happens from there. The biggest signal to pay attention to, and why I'm overall like, hey, something crazy could be happening in the market. We could just see a crash next week. We genuinely could, but I think it'll be more complicated than that, as those daily MACDs are far away from center lines. If this weekly starts to turn up, we can start to see a long period of time of volatility. And down here, you have a high likelihood to turn up and start to turn up a monthly into positive territory, because you have a triple divergence down here on the RSI and the MACD at the same time. That was a terrible drawing, but it's on the RSI and MACD at the same time. And that tells me the momentum for the volatility going down is kind of dead, and we are about to see some kind of spike in volatility. And I believe that maybe that is going to be some kind of fake thing that then ends up fading, and then over time we're going to end up back above 2020 sometime in the fall or going into January of 2025. That is my overall assessment at this point. I'm just following the signals. That looks like the most likely scenario, but that looks like what is happening to me. We're seeing volatility that can creep up at any time, while we're also seeing that weakness in the SPY. We did it on the shorter time frames live on Friday, and it was a lot of fun to pay attention to those signals. So overall, the main takeaway from this video is GME and AMC look like they are about to pop, and we're also seeing signs that the market, aka the SPY, and the Qs could drop at the same time, which tells you that AMC and GME, the problem is real and their collateral is at risk here. And so we're going to see a downturn for whatever reason that they make up, but also it could be GME and AMC that is causing those problems. So we could run into banking issues, we could run into a lot of things, and then maybe we actually see earnings save the market, and then that turns up for another period of time that then leads to an overall bigger crash after some kind of fake squeeze from GME and AMC, where the real squeeze happens around that time. So we'll pay attention to these things. It still looks like a very plausible reaction for GME and AMC could happen on Monday. So we're paying attention. Thank you guys so much for watching. I really do appreciate it. Look out for that new course that's coming out on Sunday. I'm going to work on it over the weekend and really get some good info to you guys, get you guys those entries, how to swing trade, how to understand the MACD, how to understand the RSI. Those are still very important things. And then we got to talk about these moving averages a little bit more in the swing trading course. They're a little bit more important for swing trading, so we'll pay attention to that. So thank you guys for watching. I hope you guys have a great weekend. If you dedicate yourself to some learning, there's a link in the description for the course right now. If you want to grab that over the weekend, I respect you for it, but I still encourage you to make sure to have some fun. Make sure to eat some good food, go out, touch some grass, have some fun with friends or family. And other than that, I just really wish you guys good luck going forward with your trading. I think that a lot of people are reacting and trading like water, and I respect the hell out of you for that. Seeing a lot of people come into the chat and just say how the course has helped them, it really brightens my day, and I really love to hear that from you guys. So thank you for watching. Have a great weekend, and I'll see you guys tomorrow. All right, peace.